Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, June 30th, 2008. Well, the second quarter of 2008 has come to a close today, folks, and we're going to kind of look back at what happened this quarter, where we've come from, and where we're headed. We're going to take a look at oil, how it's influencing the market overall here, and we're also going to take a look at gold and the dollar, and really how the dollar's played a key role in everything that's been going on lately. All right, so let's get right into it here and talk a little bit about what the market did today. All right, number one, just looking across the board, you guys know where we've stood on this market over the last couple days. Ever since that big move down, we raised our chances of a bounce to about 65%, and that move was down, I believe, Thursday. And you had a flat day Friday, again a flat day today, but we've been in a neutral stance here with about, we put it at around 65% of chance of a bounce going into this July 4th weekend. We're going to stay there. As we do think there's a fair chance. It's not a tremendous chance, but a fair chance of a little bounce in the markets. Nothing dramatic, but we are seeing after this July 4th weekend coming up, maybe a week or so after. We'll isolate the exact date and give you guys the turn date a couple days before, but we are seeing the possibility of a market moving up pretty strong here, as it seems like we're seeing some signals on these chart patterns, and some key signals at that. Some patterns, some pricing, some timing issues all coming to converge mid-ish July, give or take. So we'll isolate that, folks, and see what we come up with. But let's take a look at the intraday chart and go over what the market did today. The Dow was positive, just fractionally up 3.5 points. The S&P was up 1.5 just fractionally as well. And the NASDAQ, again, and this is interesting, is that ever since Research in Motion came out with earnings and Oracle came out with earnings and they both got slammed, technology stocks have really taken the brunt of the storm here, with the S&P and the Dow the last couple days being basically give or take. The NASDAQ has been getting hit lately, and we'll see, do we think that's going to continue, and we're going to discuss that as well. So let's first take a look at this market, because you can see the market was up and down and all around here, and what we really saw was early in the mornings you had oil up. All right, and we talked about oil as being a major contributor to what this market does. And if I had to put odds on it, basically the price of oil, which is basically coinciding with the dollar at this point, is, I would say, 60 to 65% of what the market does. All right, then you can throw in a few other things. Then you throw in financials, which are probably about 25%. And there's maybe 10% of mixed shares of other things, technology earnings and so forth. But the majority of it is all about oil. And I said in Friday's video, whatever oil does, the market will do. And well, guess what? Oil was flat today. The markets were flat today. And you can see the kind of the interesting comparison there, what's going on out there in the markets. Now, the interesting thing about today, and we were actually had a decent gains in the market, as you can see up here. This is coinciding with oil's fall. So really what happened here, right around 8 to 9 o'clock, we saw the markets gapping down a little as oil was more moving up, or the markets were basically starting out flattish, and that was with oil up about $2. And we really saw oil start to sell off, and with that, the markets got a little bit of a push, a beautiful little push, in fact, coming all the way up to this 1290-ish area, give or take. And you can see the little top that it put in the markets. It pulled back, retraced to a double top, pulled back again, a little push up again, and it could not get through this 92 level, this 1290 to 92 level. Now, again, the area on the futures and the S&P that we're looking to get back above would be somewhere in the range of 1298 on the S&P. We get through that level and we're going to be much more confident that this market is going to go higher. So we have to see a close above that for now, and that could change as we go, but keep a watch on that key level, as it was a key breakdown level and now it's a key resistance level on the upside. Now what you see here is, even though oil really, oil was wishy-washy all day, but really closing flat, but what happened here is you're seeing that financials really started to lose ground. At this point, you had a little retrace, beautiful in spirit of bear flag, and then another dump here. But what we're going to focus on here is Lehman. Lehman got just pounded today, down $2.50, closing underneath $20. Now, interestingly enough, and you can see this is the ugly day on Lehman here, and we can look at the daily chart, and you can see we actually took out that bottom level right here. You had a double bottom right there. Now, believe it or not, sometimes I look at this as a buying opportunity. A lot of times you pierce, and I always say, and you guys know by now, when you take out that low and you pierce that low and everyone gets bearish on it, all stops are taken out. Amateurs and average investors get very scared out of that situation, and oftentimes they dump their positions, and that's a perfect opportunity for large players to come in and pick up that stock that's getting dumped by the little guy, in other words. So the big player, basically the shark, takes care of the fish in that situation. Now, interestingly enough, I talk about this type of play all the time. It doesn't mean it's always the bottom, or it could be just a micro bounce or whatever. But long story short, funny thing, Morgan Stanley, I believe, just came out after hours here and upgraded to overweight Lehman Brothers, and it's getting about 60-cent bounce after hours. Now, who knows if that lasts? I don't really understand the whole deal behind that. It just seems like when a banks upgrade each other, it's kind of like doing a favor, and then tomorrow Lehman will upgrade Morgan's, and vice versa, and just go back and forth. I don't know. What do you say to that? It's kind of like me saying that a competitor of mine here at In the Money Stocks is a good buy, and then they turn around and say, oh, well, they're good too, and we're just patting each other on the back to try and boost our stock price. Now, in all fairness, it's an upgrade, and the market will react accordingly, and we're seeing it trading up 60 cents off of that. So maybe they're right. Maybe they're picking the bottom. The financials, a lot of people have tried to pick the bottom just in the last couple months, all the way down here, and they've been wrong. So we'll see. I think of all places, this is where I'd like it too, but it doesn't mean it's not going to get a Bear Stearns type buyout where they could just get crushed and get bought out for $2, and then it gets raised to $10 or whatever they got bought out for. So keep that in mind, folks. This is a majority of why the market got taken down, even with oil being flat today, a little bit there. But nonetheless, the market did close flat today, and we'll see. National Semi actually came out as well after hours, and their stock is trading up nicely. Basically, they were saying they're entering the solar sector, and the stock is up about 40 cents. And here's National Semi, and you can see it had a very nice move, a little pullback, another try attempt, and a hard pullback, and now it's gonna gap up right into this resistance area tomorrow. We'll see where it goes on National Semi NSM tomorrow. So that's one that will be in play tomorrow as well. It's a large cap semiconductor player. Now, let's take a look at the NASDAQ and the S&P. We've gone over the intraday. Now we really want to know, where is this market going? Now, I'm going to talk about oil, the U.S. dollar. We all know the at this point from watching these videos how intricate and how intertwined the dollar is at this point with oil. And that's why after the Fed last week, you saw oil really get some momentum to the upside. Now, one thing I did point out on Friday that we need to continue to watch was this pattern, which this was our call of the top of the market back in May, and you guys see where we went from there. All right. One thing I want to point out is we did have this, and everyone kind of said, wow, In the Money Stocks might be wrong for once here on their call, and then you saw the reversal to the downside. Now, this same type of pattern is somewhat appearing on that USO, all right, and I just want to show that out to you. You had that as of Friday, and we're going to still watch it. We closed flat on the USO today, but you can see that same pattern with a little tail on the top, and today we gapped up, and oil gapped up, and it sold all the way back down to close flat on the day. So really what we're going to watch here is, do we take out this high of this candle? You take that out to the upside, then all bets are off, and that's probably considered a decent breakout out of that channel we had talked about here. But should we not be able to take out that high and we start to come back down, then you watch the bottom of that channel on the USO as the key support area. Should that get taken out, well, then you're talking gap fill below and so forth, and that should coincide with some support right at the 50 moving average, which is right here as well. So there's a lot of things that we're working through here. Again, whatever oil does, the markets will do, and that's the way it's going to be here until oil comes down a bit. A lot of people are saying, over the weekend I heard nothing but bullish things about oil, and that almost made me more believe that we would have a flat to down day today, and that's what we did have. Even when we were gapped up this morning, there was just so much talk about Israel and Iran and a war and all this stuff going on, and everyone talking, well, oil, this is going to happen, and oil is going to 200. That's a dead signal oftentimes that you have a top in the market, or that you're basically beginning to see that top, whether it's here or not, it's beginning to get there. So keep a watch on that, guys. We'll see if I'm right on this. It's a tough thing to call. You're trying to pick a top here, and that's one of the hardest things to do in the market, to pick a top or a bottom. So we will continue to monitor that. Let's take a look at that SPY again, because I really want to focus on this, going back to the SPY chart. Some interesting pattern formation. You're obviously seeing us hit the lows, which were reached back in March and back in January, which is a triple bottom area. Now, do we get a bounce off of that and retrace and then break down? We're on a pivotal point here, and I can't stress that enough. If you look at the monthly chart, and I don't have time to go into the monthly here, maybe I can do that tomorrow. The monthly, the weekly, you can draw trend lines on these charts, on the SPY, that have key levels we're touching now that we've hit multiple times, and they're either going to hold here or they're not. Now, again, we favor a neutral stance here through July 4th, and we're seeing a possible move up afterwards, but who really knows, If we break that level, then it could get very, very ugly, and you could have that final capitulation move in the market that we always like to see before you actually get that move. Now, at first we thought that this might, the move last Thursday possibly was a capitulation move. The volume really wasn't heavy enough, and we kind of just, whittled our way around this lower area. So we're going to have to continue to watch that. But long story short, this is a key level. The question is, do we break lower from here? Should we have one more bad day and a breakdown? We'll reanalyze the charts. I wouldn't mind, believe it or not, if we did have one more down day where we took out the lows from January and March. Should we do that, then it almost makes me feel like that's the point where I would give it a shot and have a very tight stop on the market. And you guys know my philosophy on that. You break down, you take out stops, a lot of the big money accumulates there and so forth. But it's up in the air. Alright guys, flat day in the markets, flat day in oil. Come join the chat room. Phenomenal chat room. You're going to learn more than you ever thought. Have a wonderful day. We'll talk to you tomorrow.